Good morning, everyone, and a very, very warm welcome to you all to this first session in the Future of Payment stream. Personally, I can't think of a better way to kick off a Monday morning than by asking ourselves that very question. What does the future of payments look like? And if we pause on that for a moment, what thoughts first spring to your mind? How far into the future are you thinking? What type of technological innovation is whirring around your brain? Are you thinking kind of space-age chips in people's fingertips that allow them to swipe and pay for things? Or are you wondering how embedded finance can fundamentally change how we even define what a payment is? Or perhaps you're thinking a little more short-term about how you'd be happy with the future of payments if your bank's ISO 20022 migration happens on time and on budget. When I think about the future of payments, it's this: the ability to pay anyone, anywhere, anytime, all in real time. My name is Piers, and I'm Product Director for Payments at Currencycloud. We provide FX and cross-border payments via API, and our platform powers banks, fintechs, and FX brokers around the world to collect, convert, and pay in more than 35 currencies to over 200 countries around the globe. And today, I'd like you to join me in thinking about the future of payments from that global perspective. As Eugene said, the pandemic may have closed many domestic borders, but the accompanying digital acceleration hasn't stopped goods and services from crossing those borders. First, we'll reflect on how we've got to where we're at from two perspectives: that of technological innovation and that of social financial inclusion. Second, we'll touch on global interoperability and the role that plays between innovation and inclusion. And last, we'll think about the payment innovations that will continue to power financial inclusion in the global community in future. So let's jump into part one on innovation and inclusion. And if, like me, you believe that the future of payments is to be able to pay anyone, anywhere, anytime, all in real time, then there is no better stop-off on our journey to that future than at the present day. So let's reflect on three recent but important technological innovations and what their impact has been on financial inclusion and social change. First up, it's mobile adoption, supporting financial inclusion globally. So of the 2 billion unbanked people around the globe today, 2/3 have mobile phones. Financial services are increasingly being provided to the unbanked through those mobile devices, meaning anyone with a mobile phone can pay their bills or set aside a small amount every month in savings, for example. Importantly, half of the world's mobile money services are in Africa. And last year, mobile money users in Africa and the Middle East made transactions amounting to $500 billion. One of the impressive results, I think, of mobile money in Africa is that the cost of sending remittances has been cut by up to 50%. Beyond Africa, China and India have also been pioneers in mobile payments, but in all cases, systemic actors such as M-Pesa in Kenya and those in China and India have really spurred the development of digital money around the world. Now, we all use mobile phones and know how convenient they are. I, for one, cannot imagine life without mine. So it should be no surprise that a recent IMF report highlighted that, especially in Africa, convenience is the most important aspect of mobile money. It makes access to money simple, available any time of day. It's often safer than cash, and for people in more rural areas, avoids the costly trips to the nearest bank or ATM. Now, these benefits may seem rudimentary to some, but are transformational for improving the daily lives of the underprivileged. And indeed, the COVID-19 pandemic has magnified these benefits, and not just for the underprivileged. Digital payments are allowing people and firms to conduct financial services while still adhering to social distancing recommendations. Africa and Asia have seen the largest increase in digital payments because of the pandemic, with China and India in particular seeing a surge of not just contactless, but contact-free mobile payments using QR codes, for example. All being said, undoubtedly, the first wave of mobile telephony technology, followed by that second wave of mobile money services, have transformed that concept of social financial inclusion in many parts of the world, but arguably led by the pioneers in the African continent. And this is going to be an important factor when we think about the future of payments later on. The second key innovation over the past 5 years is the proliferation of instant payment schemes around the world and what this has done in the app economy. Almost 60 countries have instant payments live today. And with more in the making, in the last 5 years, we've seen the number of live routes jump almost 400%. Governments, central banks, payment system operators, and retail banks around the globe have been in overdrive on digital transformation journeys to upgrade legacy systems and infrastructure to handle real-time payments 24/7. And many of you here today will have been on that same journey. New instant payment schemes are also built for modern use cases. Most legacy payment schemes have no concept of payers sending money from different countries, for example. But the new payment schemes allow for that full transport and transparency of data along the payment chain. And this in turn empowers compliance and risk teams to accept payments for modern day use cases that previously may have been out of appetite, thereby increasing the reachability for many senders. The key driver for this global move to instant really has been the customer. Customers like me and you who are part of the app economy, all demanding more from all types of services, but including those in financial services. This has caused a trickle-up effect from retail users to SMEs, and in some cases, even corporates adopting instant payments. For individuals, the everything on demand economy means they have no less expectation for money to move as quickly as digital information already moves within the app economy. Companies like Currencycloud have started to stitch together this patchwork of instant payment schemes to empower our clients and their customers to start to be able to pay anyone, anywhere, anytime, all in real time. Last up, the third key innovation for me is Swift GPI. Now, admittedly, I'm slightly biased here, coming from a cross-border payments background, but we shouldn't underestimate the impact that this initiative has had on the traditional correspondent banking wire transfers. For those of you who don't yet know what it is, Swift GPI is effectively the UPS parcel tracking equivalent of an MT103 wire payment. Since being launched in 2017, 75% of all cross-border payments are now sent via GPI, and over 4,500 financial institutions have signed up as members, which I think you'll agree in 4 years for financial institutions is moving at an absolutely incredible pace. Currencycloud became GPI members back in 2019, and then a year later, we became the first non-bank to offer payment tracking via API out to our clients. And we've seen that over 45% of all of our wire payments are now crediting the beneficiary in under 5 minutes. For all intents and purposes, these are wire payments being sent and credited in real time. Add to this the transparency to see exactly where in the payment chain the money is and which institutions have deducted processing fees in the payment chain. And the Swift GPI initiative really has been another game changer in terms of financial inclusion. So let's move on to talking about the concept of interoperability. And if the future of payments is dependent upon both technological innovation and financial inclusion, then binding these two terms together is this concept of interoperability. Now, many payments people talk freely about interoperability, and at its core, I suppose the definition is the ability of computer systems or software to exchange and make use of information. But in the same way that technology for technology's sake tends not to make a real impact, interoperability is not happening for the sake of interoperability. I would argue that it acts as the glue between innovation and inclusion. It binds together technology with social change. It allows innovation to actually make a positive impact on people's lives. And for me, APIs are the first key component when thinking about interoperability. In the global digital economy, you have to think of APIs as really just the piping between an organization and its customer. And I see 3 clear benefits that have come out of that API economy. The first is customer centricity. Over the past decade, we've seen a fundamental shift in mindset. It's no longer about what a business sells, but about what customer needs that business can satisfy. We've shifted from selling products to solving problems. And APIs have been a key enabler for this. Instead of businesses each building similar versions of core components, APIs allow businesses to connect products and services from other providers and partners more quickly than ever before. The second is speed to market. Startups and established players alike have benefited from using APIs to launch new ideas in a fraction of the time it would have taken without them. Ready-made, out-of-the-box components via API now provide the invisible backbone of many of the apps and services that we all know and love. Businesses are launching products and, importantly, making revenue from those products more quickly than ever before. And the third, it's flexibility. So at Currencycloud, we think about APIs like Lego bricks, individual pieces that can be put together in whatever way the creator envisages. And this enables and encourages businesses to experiment and to iterate far quicker than ever before. And this idea of rapid experimentation and agile iteration, which is as much from a product development perspective as from a business mindset perspective, leads across the business to increased innovation, which in turn wins new customers and generates new revenue streams. So coming back to interoperability, the second key component for me is data standardization. Again, one official definition is the process of implementing and developing technical standards based on the consensus of different parties that include firms, users, interest groups, standard organizations, and governments. Now, in principle, I totally agree with this. The idea that a single format, like an MT103 or a PAC 008 message, can be agreed upon and then used by institutions on the other side of the planet in perfect harmony is a really, really nice one. But I'd like to ask you, is this actually happening in practice? Personally, I don't see it. One recent example that we saw was an integration that we did last year with a bank in Central Eastern Europe, in Austria, who had created their own variation to the ISO standard on top of the Austrian variation, which was already a deviation from the ISO 20022 base standard. The truth is that in a cross-border world, we're talking about different banks, different regulators, different payment system operators who are each governed by distinct rules and time zones, regulations, customs, traditions, behaviors, and languages. And because of all of this, deviations from the standard quickly begin to emerge. And soon enough, the standard is no longer standardized. How much is it costing all of us to adhere to these variations each year? Are we actually all trying to standardize the unstandardizable? So for me, when it comes to interoperability, it's not about standardization, but rather about simplification. Any tech business should be able to offer financial services without, in theory, having to actually understand the ins and outs of those financial services. Standardization assumes a shared level of knowledge across the user base, and it promotes financial division. Simplification, on the other hand, allows anyone to enter into that user base. It levels the playing field. It promotes financial inclusion. The last thing for me to say on this is that I hope that most of you have already begun the API journey within your institutions. But if not, my one request to you is to begin that now. And that journey does not have to be alone. The very point of Lego brick, modular, flexible APIs is that they can be consumed in isolation or added incrementally on top of existing systems. But please use the opportunity now to begin that investment in time, because much of the future of payments is dependent on this key technical connectivity method. So let's come back to part 2 of innovation and inclusion. And let's finally turn our minds towards the future of cross-border payments and how we might achieve that goal of paying anyone, anywhere, anytime, all in real time. Again, keep in mind that innovation is the flip side of the coin to financial inclusion. New tech will mean that we'll all need to adopt a new mindset in an increasingly digital and increasingly instant world. So the first key innovation for me is in what I call instant everything. Any of you here today who have been involved in your bank's journey to instant payments knows how much more than just payment processing there is in the payment lifecycle. Back office systems, transaction screening, liquidity management systems, they all need to be rebuilt or reintegrated to handle pre and post-payment actions in milliseconds. And that is no mean feat. But in addition to your customers expecting real-time domestically, people, goods, and services are flowing across borders beyond the scope of the domestic schemes you operate in today. People and businesses anywhere expect to be able to transact across those borders as easily as they can interact in the global digital economy. The challenges for all of us in the payments world then multiply exponentially when trying to enable instant payments, not just domestically, but globally and across borders. For me, there are three key pillars propping up the future success of instant payments. And the first, you may not be surprised to hear, is that APIs will be the beating heart of the future of payments. In practice, it is the only mechanism by which data will be able to flow seamlessly through systems and across borders quickly enough to move money instantaneously. Second, anti-fraud and money laundering screening and monitoring systems will need to be real-time too. And as a result of those improved real-time processing systems, we'll likely see the role of compliance teams evolve within banks and financial institutions. I expect to see the best data scientists being employed to explore the ever-growing data sets and start to use historical data to predict or even prescribe what actions should happen on a transaction in real time. And third up, it's real-time pre-validation of payment data. And by this, I don't just mean IBAN structure checks, but API calls through to beneficiary banks to ensure that the payment data is valid to land the payment before the payment is even executed. The UK's confirmation of payee scheme is a good example of this, and is a model I expect to see being adopted globally to start to reduce customer friction, reduce payment fraud and operational cost within the payment lifecycle. But the challenge really for us all here is how in practice we stitch all these three things together. Building any of these components in isolation is expensive, it's high risk, resource intensive, and has a limited return on investment. However, it's the sum of all of these parts that offers the infrastructure to pay anyone, anywhere in real time. For me, the answer lies in partnerships with best-in-class providers for those individual components within the instant payments lifecycle. Currencycloud already acts as a trusted partner to banks and fintechs around the world who are looking to outsource aspects of their cross-border payments via our APIs. For example, by outsourcing the creation and management of virtual accounts in the USA to a provider like Currencycloud, it allows you to concentrate wholly on your customer's user experience. The next important innovation for me will be in the space of digital identity and Digi-ID management. A recent report from the Monetary Authority of Singapore highlighted 4 key pillars of the digital infrastructure required to support a modern economy. And the first was digital identity. They talked about how Digi-ID will ensure authentication and validation of an individual's identity while simultaneously delivering both privacy and security. But digital ID in this respect, for me, extends beyond just individuals and goes to businesses and perhaps in the age of the Internet of Things, to objects too. If your individual data is protected by a digital identity framework, why shouldn't your connected device be too? In an entirely digital world, data really does become the new oil. So the key question here is, who should be the guardians of that digital identity? Swift has started to venture into this space and may well be best positioned in the financial world, but in reality, are they really the technological leaders in the space? Arguably not. Today, it's probably the big techs, the likes of Google, Amazon, Facebook, Apple, Microsoft, who already store this information about each and every one of us. But how does this then translate into financial services and into the future of payments? Again, the challenge at a global level here is how these interoperate, and undoubtedly APIs will be key here. I believe that the opportunity will be there for agile tech companies to help the wider financial community to stitch together digital ID services in a similar way to the way that Currencycloud is today weaving together a network of virtual accounts, trading and payment services around the globe. The last innovation I want to call out is on digital currency and the effects this may have on social financial inclusion. 10 years after the inception of Bitcoin, some cryptocurrencies are seeing increased adoption in certain countries, particularly in developing countries. Nigeria, for example, is absolutely leading the way. Almost a third of Nigerians now own some form of cryptocurrency. But do I see the future of payments in Bitcoin? No, and I'll tell you why. The best diagram I've seen to detail the taxonomy of money is this from the Bank for International Settlements. And it helps put in perspective what cryptocurrencies are and therefore what they might be used for in future. There was a famous quote that said, cryptocurrencies are everything that people don't understand about financial services combined with everything that people don't understand about technology. But cryptocurrencies that have shot to fame over the past 10 years, the likes of Bitcoin and Ethereum, clearly sit outside of the domain of central banks. So if we return to that question of why a third of Nigerians currently own crypto, it helps to put it in the context of this diagram. Perhaps it's precisely because these cryptocurrencies sit outside of the domain, control, and visibility of central banks, and perhaps by extension, governments, that it's led to its wider spread adoption in certain countries. In USD equivalent terms, if you were living in Nigeria, you would have seen your net worth in USD terms in the Naira drop by nearly 50% between 2016 and 2020. And if the average citizen believes that their government has some influence on currency valuation, then it makes logical sense to perhaps invest in an alternative asset if you lose trust in that government or the other bodies that make up that currency system. For decades, that alternative asset has been the US dollar, but a growing proportion of people believe that this should be in cryptocurrencies that are perhaps protected from the whims of political actors closer to home, despite the volatility that they continue to present. From a global and social inclusion perspective, cryptos are, however, helping to increase the speed of transactions by effectively bypassing traditional money markets around the world, but also in reducing transactional cost as banks and other financial institutions are disintermediated by the blockchain technologies that underpin these cryptocurrencies. The fact that digital wallets to hold these cryptocurrencies are also available on mobile devices is really the cherry on top of the financial inclusion cake. But if we return to the future of payments, I said just now that I don't believe that it will be in blockchain, precisely because these mostly fall outside of the domain of central banks. Let's go back to the concept of people holding balances in USD I mentioned a few minutes ago. Why have people around the world for decades held US dollar? For me, it comes back to trust. They trust in the political, social, economical institutions that create and manage that currency, and in the right systems, regulation, and people to protect that currency's value. Bitcoin and other cryptos like it have precisely the opposite effect when viewed at a macro level. Cryptocurrencies decentralize. They strip that power away from the central and commercial banks and governments alike, and by extension, remove that trust for many people. So what is the future then? Well, if we agree that the underlying technology can help speed up and reduce the cost of payments, then there is a huge opportunity when this innovation is then combined with the trust that most people currently have in their governments and in their financial systems. And for me, the answer is in CBDCs, central bank digital currencies, that combine that innovation with trust. And I think other people agree. Over 80 countries representing almost 90% of global GDP are now exploring a CBDC, up from only 35 in May last year, I think evidence of the effects of the pandemic. What's fascinating here is the opportunity for progress in Africa, given the level of mobile adoption and technological innovation that's already happened in various countries around the continent. But look, as astute members of the financial community, you will of course recognize the challenges that CBDCs will also pose. Interoperability to other CBDCs, digital identity, running fiat and e-currency in parallel, and the operational frameworks between central and retail banks are some to name a few. But overall, we shouldn't underestimate the importance of this technology and the positive impact this could have on billions of people's lives when it comes to financial inclusion in the not too distant future. Let's watch this space. So to wrap up, this is an incredibly exciting time to be in payments. We're seeing innovation happen around us every day. And what really pleases me is that for the most part, this innovation is happening to improve the lives of people around the world. If there is one thing that I would urge you to take away today, it's that the future of payments is being able to pay anyone, anywhere, anytime, all in real time. Yes, there'll be more innovation that helps achieve this, but equally important is the burden on all of our shoulders in the payment space to make this innovation inclusive, to open up financial opportunities to more people than ever before. At Currencycloud, we'd love to be part of that journey with you. If you'd like to find out about any more about Currencycloud or what we're doing with instant payments, please reach out so we can continue this conversation. But for now, I'd like to say a huge thank you for joining us this morning, and I hope that you enjoy the rest of the Banking Transformation Africa event. Thank you.
Right, thank you so much, Piers. Thank you very much for that presentation. Of course, very forward-looking, and you've said pay anyone, anywhere, anytime, and all of that in real time. And inclusivity will be very key, and I couldn't agree more. I'd like us to pick some questions. I've seen we have some questions on the far right of the screen, and I'll read one of them from Matthew Maxwell. Maxwell says, financial inclusion plus different ISO standards, does the increasing number of payment rails, that's the cards, wallets, blockchain, and stable coins, etc., pose a further friction in banking? This, I think, is for you, Piers. Would you like to respond to that?
Yeah, absolutely. I think this comes back to this concept of interoperability, but also the ability to pay anyone. Paying anyone is dependent upon what mechanism that person wants to be, or business wants to be paid on. And so the challenge for banks, for fintechs, will be about how to achieve that interoperability between different payment rails. It comes back to the data standardization and the data simplification, yes. But I think, again, APIs will be a key important factor here, I suppose, in giving institutions the easiest way to start connecting different systems, different rails into each other.
Right. There's another set of questions from Joe Patterson. Joe says, in the payment race, do you think banks will get innovation before fintechs get scale? And he comes back to say, do you also think ISO via API is the future?
Yeah, great question. So I think when I think about banks, I think we have to look at the size of the bank. It's a key determining factor here. You see some of the largest global banks around the world who are at the forefront of technological innovation versus smaller banks, perhaps more regional or domestic banks that really don't have that capability, capacity, maybe even resource to do that. And I think here with different banks, we're going to see different strategies playing out. There will be, I'm convinced that partnerships will be the way forward in many cases here, where banks of all sorts of different sizes then leverage some of the technological capabilities that maybe smaller fintechs might be able to offer, but who don't have that inherent scale.
Right. This question by Nick is kind of tricky. I don't know if you'll rub some people in a in a certain way. I'm hoping you'll try to be a bit diplomatic. He's asking, which company or bank do you think is leading the financial digital innovation in Africa? Yeah.
Oh, great question. Do you want to answer that first and give me 30 seconds to think?
Right. So I don't know what, Nick, would you like to I don't know if probably we have some of the financial institutions representing Africa here on this platform. So I'm not quite certain whether the answer will be what they would want to hear or what is actually on the ground.
Well,
But
look, I'll definitely call out one who we know very well is Standard Bank and the Shift product, the digital product that they have created over the past few years that has had absolutely fantastic traction and adoption within South Africa, and again, I think has been absolutely key in sort of leading some of that innovation and changing the concept of what sort of money on people's mobiles really means, definitely within South Africa, and I know looking to extend beyond that.
Right. Piers, before I leave you or let you go, I wanted to ask you a quick one. You said that the API journey is very key, and you hope that most of the participants who are here with us today have already started that particular journey. I would like to hear from you, from Currencycloud, how easy or how hard was this journey or beginning this journey for you? You know, what was easy, what was difficult for you, just in a nutshell?
So when Currencycloud was launched, sort of 8, 9, almost 10 years ago, we launched as an API first business. We have APIs at the core of our DNA, and of course that helps us now in that API evolution. But I think the very point of that, one of the USPs for us, the point of our existence, is then to be able to, for those APIs to then be digested, consumed very easily by banks and fintechs around the world, who perhaps are at a later stage within their API journey. So while we are creating those APIs and microservices for others to leverage, it doesn't necessarily mean that journey has to be a difficult one to start for banks and fintechs around the world.
Right. Very interesting indeed. I know for sure that due to time, we need to wrap it up on that note. Unless if there's any other question, feel free to type it on the chat box or the Q&A session. We'll be able to throw those questions over to the speakers. But what I know for sure is that the future of cross-border payments, just from the word cross-border, it means that we are talking about, getting into territories that are foreign. And what will be important will be harmonization of the tech, abilities, policies, regulatory frameworks to ensure a seamless rollout. And we're hoping that we'll be able to work together in this particular line. Thank you so much, Piers. Of course, you have been very instrumental in supporting these particular areas. We want to say thank you, and thank you also for sponsoring this session.
Thank you. Thank you for having us.